Thank you, ma'am. Please start.
Yeah. So, good evening, everyone. My name is Vitasta Marhatta, and I am an associate researcher at Global Alliance for Financial Inclusion, promoted by Global Council for the Promotion of International Trade. Now, I'll give you a brief about what GAFI is. So, GAFI is a coalition of organizations focused on accelerating financial inclusion to ensure inclusive and sustained economic growth. By promoting multi stakeholder approaches, it aims to make financial services available, accessible, and affordable for all, improving system performance and attracting new investments. In my role, I have the privilege of gathering insights from interviews with global leaders in the financial inclusion space. These insights are then analyzed and turned into valuable resources to help us all move forward. We are here to explore the exciting and rapidly evolving world of insurtech, a field that is significantly transforming the insurance industry. So today we are honored to have with us distinguished speaker Shifali Sonpar, often referred to as the tech whisperer. She has a remarkable ability to seamlessly connect people, businesses, and technology, making digital transformation a tangible reality. A qualified underwriter herself, Shivali ma'am has established three greenfield operations and led digital transformations for global insurers. Across US, EU, and APAC regions, she leverages the power of data, processes, and analytics to drive these transformations. So now I request to please join me in welcoming ma'am as she shares her valuable insights and experiences with us today. Thank you.
Namaste. Good morning, good evening, and good afternoon for anybody joining from and listening in today. First of all, thank you so much for GCPIT and for this complete honor. I have been in this industry now for a lot over 20 years, and I have always been extremely passionate about how digital and technologies can make our industry, insurance, much more user-friendly, much more customer-centric. One of the biggest challenges our industry continues to be plagued. Even after 20 years of me being in the industry, this is the same thing that we keep hearing and hearing again, is trust, lack of customer experience, and lack of transparency. And I firmly believe that today, with the advent of new age technologies, that is one problem which we can solve. And in the next about 30 minutes to 45 minutes, I'm going to try and give some points of views that I have gathered. Most of them are not generated by me. They are curated from different places, just assimilated in a few thoughts. But the idea really is that we all can get some fodder on what is the art of possible. Where is the future of InsurTech, or where is the future of insurance going and becoming as we speak today? So for starters, let's baseline and understand what is the definition of InsurTech as far as the scope of this session is concerned. In short, InsurTech is insurance technology and is usually considered a subset of traditionally called fintech, also called financial technology. InsurTech companies use technologies like artificial intelligence, big data, analytics, blockchain, and machine learning to automate and improve the industry value chain. In my definition, the value chain of insurance starts all the way from product development, risk selection, risk issuance or binding, customer service, claims, which is obviously the traditional version of insurance, But with today, the advent and the maturity of data, analytics, and automation, we are now moving into partnering with our clients and customers to become an end-to-end predictive risk partner. We are moving into prevention. We are moving into cure. And that is where the part of health tech becoming part of insurance, service providing becomes part of insurance, ability to reach customers from different channels means without being intrusive becomes part of insurance. So today, insurance is no more an individual company like traditionally we used to say an agent comes and sells you a policy, or whether it is a B2B or B2C. Today, insurance is an ecosystem. And it works seamlessly to deliver a promise of insurance through multiple means and multiple partners. So that's going to be the scope of the next 45 minutes, 30 to 45 minutes. And how is technology a key player to make this happen? We can talk about endless, and this is just an extract I have from an old Excel I had created. And to be honest, this could be, I could be sitting in the 90s, I could be sitting in the 2000s, I could be sitting right now in 2024. The challenges and the gap in the industry have not changed considerably. And the requirement to address those challenges and gaps have also not changed considerably. What has changed in the last 5 years is our ability to create those capabilities and close these gaps. The advancements of technology, the advancements of use of data, security, analytics, automation, deep intelligence has now made it possible for us to move into a realm, which very quickly I'm going to introduce, which I like to call virtual insurer. Putting that aside and leaving that thought in your mind, let's move on and see what is the difference between the traditional, or like I sometimes call the old world insurance company, versus what today the industry is facing. Traditionally, insurance sold was insurance grown. The growth of insurance had to be linear because it was usually one-to-one sales, word of mouth sales. Your competition were your peers in your own market and in your own industry. And there was a very, very predictable model of how and when we will become growing, where, how and when, what our challenges will come as a company. And therefore, for leaders, it became relatively easier to address those challenges. Today, the growth of some of these companies have become exponential and non-linear. Very, very recently, we have seen in India an InsurTech, considered one of the first InsurTech unicorn of India, went public. And unlike many insurers in India who have in the new age world, who have come into the country in 2000, 2001, 2002, many of them still struggling to break even. This InsurTech, Go Digit, has already gone break even. Now, that is what is the power of new world technology, where the growth from zero to break even can be as soon as 4 to 5 years. And they are the first InsurTech unicorn that we can talk of in India. Now there are many more, and all of them are catching up. And so the power of ecosystem comes into play. Many of you have experienced this, and this is a global phenomenon. When we are admitted in a hospital ourselves or our loved ones, a doctor may come at around 7 o'clock or 8 o'clock in the morning and tell you, you're fit today, you will be discharged. From the time of setting an expectation that today I or my friend is going to be discharged to the point that the actual person walks out of the hospital, the delay can be anything from 3 hours to a day. And very often this delay is passed on as a responsibility of the transactions being performed by insurance company. Here, a patient is now ready to discharge. The family is eager to take them home, but you end up eating lunch, you end up having your evening tea, possibly, and therefore also possibly staying one more day of charges. And the whole ecosystem of healthcare, insurance, and the third party is working not in unison, ultimately creating a bad image for the insurance company. The advent of technology enables us to completely change that and possibly, and we'll get into a few examples as we move ahead, make it a complete seamless thing. The health technology, most health insurance companies today have a health administrative service, or the technology, the place where all the records are maintained by doctors and hospitals. Key data from that can be integrated into the a centralized and secure claim management system, and thereby an instant or near instant financial decision at the cost of insurer and non-insurable can be done, reducing the wait time from what I just said, 3 hours, to less than an hour from the point when the doctor tells you you are ready for discharge. That is the power of technology. But that also means that leaders now need to work with resilience and adaptability, the ability to ensure that you have tremendous data security, ability to work in new methods, possibly sunset some traditional methods and industries like the TPA to help technology make it happen. The way I look at it, and as Gartner had once said, when people ask you what new about ecosystem, today the ecosystem is your organization and your customer is working with the organization. But having said that, the fundamentals of insurance have not changed. The fundamental for drivers for growth, the drivers for success, measures that our regulators measure on us, the fundamentals have not changed. You're still working to improve your top line. You're still working to improve your bottom line. You're still working to improve your customer experience, and most importantly, ensuring a stable financial. But what has changed? Our ability to penetrate new market, our ability to go beyond the traditional market of tier 1, tier 2, or the standardized products that are currently untapped, allowing us to reach a greater wallet share. Multiple third-party players like, for example, Toffee, amongst others, are looking at creating unique micro insurance or point of insurance products that are able to service unique risks that traditionally our models may not have been able to do, which also means the same insurance company has a greater depth of engagement with your client. The same Toffee is helping me cover my health, my house, my pet, my holiday. which was not something that I had to do, because as a customer, I then needed to reach multiple points. My ability to penetrate through using product innovation and differentiated distribution modeling, using intermediaries that traditionally may not have been considered viable, becomes real. Influencer marketing, direct sales, embedded insurance are now a reality. If you look at the bottom line, the focus is now shifting towards prevention, because protection is what we have always done. How will prevention improve not only your customer engagement, but also your cost of claims, cost of customer service? How is it that insurance companies can partner with different players to help improve your health, help improve your lifestyle, help improve the quality of your building, help improve your fire hazards, help improve the various types of risks that I face on a daily basis, to reduce my chances of submitting a potential claim? Operational excellence and differentiation in claim management and robust fraud management continues to be a key focus area for bottom line improvement. Be it identifying positive and negative frauds, be it making claims seamless, predictive, and simple, depending a lot more on analytics, visual analytics, data analytics, and other tools available to us to maximize our risk information and give a much more accurate outcome, becomes a key driver for claims management. This all helps in reducing churn and reduce your lap ratio. Moving to customers, a value-based solution and holistic approach to a customer as compared to an individual product sales approach, creating a wow experience at the moment of truth, has become possible. What we started with, building trust through awareness and financial literacy, through simplified policy documentation and easy reach to the insurer, removes us from the black box that we have traditionally been living, where nobody knew what the insurance company was. And we had to work with a third-party intermediary who very often was more interested in selling than servicing, changes the complete paradigm of how we deal with an industry and our ecosystem. All of this will help improve our financials, what we all work for, what our regulators are tracking us on. It reduces our cost, it improves our operating model. We are able to have a seamless view on our risk profiles, bring proactive controls where we see there are leaks. Our reporting can become a lot more simplified, a lot more visible. And then the epitome of what I keep hearing as I talk to multiple insurers and multiple of my clients, they want a single version of truth when it comes to their finances. What is my sales? What is my profit? What are my claim ratios? What is my combined ratio as on a certain date? The single version of truth is the golden source that all of us are trying to reach, which is what we would like to submit to our regulators and show them how our top line, bottom line, and customer engagement is really improving through digital sales, seamless operations, and an integrated technology architecture. So how can technology convert an insurance company into an InsurTech? We have endless enabling functions or enabling technologies today. And I can rattle off more than 100 if you want. But over here, I've spoken only about first 10. But the truth of the matter is each of these are further fragmented and dissected into complex, simple, and detailed. So you may have mobility solutions, you have analytics, you have automation, you have chatbot for customer engagement, you have workflows, you have ecosystem integrators, you have dynamic insights, you have payment integrations, you have your IoT, big data, you have cloud. And not only do they work individually, they work together to create a solution for a problem or a use case. So for example, lead origination, just taking one example, lead origination to make it better and have a more successful lead origination funnel, you are looking at the use of mobility, workflow, data, cloud, and dynamic insight. If you look at another example, you look at, for example, agent onboarding. Again, mobility, automation, workflow, and possibly cloud and big data. But the difference really comes in how do we use this technology in the right fit and the right complexity and depth. Do we need intelligent automation everywhere? Do we need intelligent workflow in all these processes? Or only maybe basic workflow, the traditional BPM that we have been used to, may actually do the magic. But when topped up with the AI/ML, it gives us a magical outcome. For example, our ability to get dynamic insight. And that is where the ability and the value of our simplified forms, simplified checks, simplified underwriting, simplified reporting, simplified issuance comes in. And this has a direct ability to grow as an insurtech because your ability to do innovation, your ability to have customer engagement and relationship, your ability to adopt new technologies just grows exponentially. So this is something why maybe a resonance, an echo of what we've been hearing. What is it that, and it seems so seamless and so possible, why are insurers, traditional leaders not able to harvest this opportunity? That is because we have built our industry and ecosystem on offline channels. We have built our technology through fragmented investments. We've had multi-vendor strategies, which has led to a highly incompatible core. And I would not blame anything to the traditional insurers. You do make the decisions that are right at that time, because technology at that time was not really evolved. So you did have to pick and choose what worked at the time. But what has that resulted in is that we are unable to leverage our enterprise level data for sharper pricing, underwriting, and customer experience. And at critical points of our processes, you need human intervention. And what is the biggest problem with human intervention? It is inconsistencies. How a Shifali would process the same 4 steps that have been written in my SOP would be very different from anybody else and would be very different from anybody else. I started my video on request of the team. And so it becomes extremely important that we de-risk ourselves from humans as much as possible to create and maintain a certain standard of processing, a certain standard of experience. I'm going to put a pin on this again. So we put a pin on two things, virtual insurance and humans possibly being eliminated. I'm trying to move the slide. So what are the insurers doing? I call it the ABC. The ABC of what insurers are doing are either they are going out and buying an InsurTech, trying to make it their own. They're going to spin off a small entity and call it digital first, but use the traditional company to have its backing for the risk management, but the experience, the processing is completely done in the digital first entity. Or you will collaborate. And I think the largest example of collaboration then that went off and became an independent company. And today, everybody's out aiming and, to move towards that is Vitality. I don't mean to preach to the choir here. I know all of us know about Vitality, but I think the success of it and the use of the way they use data and integrated multiple companies in itself to create value ahead and beyond of the pure insurance claims to prevention, health management has become a use case or a case study in itself. This is again taken from another company, not created by me, but it's a very simplified view of how insurtechs are creating new business models and how different insurtechs are using technology to improve the value chain of insurance. So we have companies that are improving the brokerage experience with Plus Simple, V Fox Clark. I spoke about Toffee a little while earlier. Direct to customers allows us to break into new kind of products and unique risks like pets, Lemonade. We all know about how Lemonade has changed homeowners insurance. We're talking about B2B and how possibly a market that earlier was untapped, like the small and medium businesses, can now get very easily insured. We also have, and I'm going to the other side now just for convenience, using different kind of services to create your own ecosystem or embedded insurance. And finally, there is this chain of providers, which is what our next few focus will be, of either independent insurtechs that actually take the risk on their books and do the insurance business through technology, which is the insurtech we spoke about, or service providers, which is this column over here, who have very interesting niche solutions with the support or the enablement of the technology solutions to create specific use cases and advantage to the industry, which can then be plugged in to create the magic or the wow factor for your insurance. Let me show you what I mean by that. If an insurance, the future of insurance or insurtech has to be, I firmly believe we need to build what I call is a virtual insurer. What is a virtual insurer? It is a fully digital insurance company. It is a company that does not have even one human being from the point of inception to the end. But for that to happen, you need to reimagine the customer journey. You need to have access to the data and services to seamlessly be able to deliver the promise of insurance at scale. Let me show you a vision here. The ability to design a digital first entity involves reimagining your operations, not as single silos, but an endless continuum, starting from distribution, moving to claims, and then again going back to distribution. It's a never-ending cycle. And if there's one industry in the world which I firmly believe can be coded and digitized, it's insurance. It's one of the most predictable insurance industry in the world. Every insurance company has distribution, new business, policy servicing, claims. And if you can do these 5 chevrons beautifully, you can move into prevention and very, very strong customer engagement. Think about it. Through the use of automation, analytics, data management, integration, workflow, dynamic insights, payment, big data and IoT, cloud, you can automate 100% of the insurance process and operations, making it fully digital. Here I am trying to present an idea of a virtual insurance company. But here is the truth. Insurance is a very human industry. The truth is, it covers humans during the point of their biggest weakness, be it death, health, burn of a house, accident of a car, loss of business, name it. It is a negative human experience, which is highly traumatizing, very sensitive. And that is where humans excel. Human excel at empathy, human excel at service. And I believe humans need to be used at the right place. There are points in the value chain where humans need to be used, but in a guided fashion to live up to the experience and the brand promise of the InsurTech. Points of purchase to give a comfort to the purchaser that, yes, you're making the right decision. Don't worry. Or during underwriting, during investigation, we are not asking for your personal data for any reason. It's just for your betterment. You will get a benefit of getting better premiums. Claims, giving an empathetic call, saying, sorry, I'm so sorry to hear you had an accident. Would you like me to send an ambulance? Would you like me to send a tow truck? As compared to, you've had an accident, send me 10 photographs, send me your RC book car, tell me that this is really you driving the car, prove to me that this is your car. These are negative experiences that a technology can take over as transactions. And humans can do it for empathy reasons and support reasons. This is when the shift of insurance from lack of trust will move to trust. And this is what is the idea today. And I know I'm running out of time, so I'm going to go a little faster. The idea today is how InsurTechs can, an individual InsurTech or a group of InsurTechs can come together to make virtual insurance a reality. So in partnership with GCPIT, we are here to figure out how today various insurtechs are doing this, making this happen. This is nothing new. And with that, we're going to be handing over back to GCPIT to hear your thoughts and comments. I'm also open to listening to any questions or any doubts. Any experiences you have, I'm here to learn from you and gain from you.
Thank you so much, ma'am, for this invaluable session. I appreciate how you covered both traditional and modern approaches, as well as top line and bottom line strategies for insights into the insurance landscape, including the rise of insurers and your explanation of those seven key business models are particularly enlightening. I also found many other aspects you discussed to be like very incredible. So, I have some questions for you. I will start questioning you one by one. My first question to you is that how will InsurTech evolve to address the growing cyber risk landscape?
I think there are two parts to this. One is a cyber risk landscape, and there's a cost to that risk, right? Um, and I like to kind of quickly address it from both sides. I think insurance as a company is also a victim or a potential target. So there are two parts. One is I, as an insurance company or an insurtech company, become a very easy target because the wealth of data that we hold, uh, possibly outside maybe the trading and the investment banking, we have the highest volume of data. And I think the nature of data is so personal very often that we become, the key targets to many threats. So there is one part to it because we as an insurance company or an insurtech company need to have extremely robust cyber security rules and guards against us. At the one time we are saying we need to be with the ecosystem, we need to integrate, we need to send data and receive data, but at the same time we need to be extremely cautious. So it's a very delicate balance that we need to follow. And the second is, as a risk, we are absorbing the risk. So the new products and innovations can come up on how we can cover the cyber risk and threats therein. So as businesses grow, small, medium, large businesses, they become targets. We as insurance companies are covering them. But how do we, because the data around that is very limited, how do we maximize the available data to extrapolate and predict what the future can hold? Becomes a very interesting challenge. This is where the blend of human and technology can come very nicely because technology can help extrapolate the data. But the reality of the data and the authenticity of the event is something where the human judgment can be played in. So it's a very evolving and dynamic situation. Um, I think the next, I'd say as soon as 18 to 24 months, we're going to see some very interesting products coming into the market. We now also are looking at data from rockets kind of getting triangulated. And that itself for me is an opportunity and a risk that we need to be aware about. Many of us who have children may have got our children trackers for security reasons, parental mental peace reasons. But we also now know that unless you have adequate security and firewalls, that data is open. And one of the technologies that I was seeing actually triangulates location and movement information through 7 satellites in the space. Now, how safe or secure is that data, and should we be cautious about that? And how does the industry address this challenge? Is an evolving discussion right now. What's up?
Can InsurTech truly disrupt the traditional insurance industry, or will it lead to more collaborations in future?
So insurtechs, like I said, are two types. One is an insurtech who actually absorbs the risk and is an insurance company, but the virtual insurer that I'm speaking about. And the second is an enabler. So the insured, a technology company who has a solution that an insurance company can collaborate with, buy, purchase, ABC, like I said. And so I firmly believe the virtual insurance can and will, if done in the right spirit, move ahead. We've already seen successes of multiple insurtechs. Um, I'm more focused on the revenue generating insurance companies. But when traditional insurance company or a new age insurance company tries to use technology to enhance it, I am firmly believe that we've already seen the change happen in the last 5 to 10 years, right? And while our pandemic had its own negatives, I think it has accelerated customer adoption and industry adoption, which in itself has accelerated the technology use. The beautiful thing about digital technology, I always feel, is this infinity loop that I like to very often say. The more data we have, the more we can use it. The more we use it, the intelligent it gets. The more intelligent it gets, the more we can use it. The more we use it, the more data it gets. And so it's like a self uh, fulfilling prophecy, if I may say. Uh, as long as you cover it with enough security and regulatory requirements, I think it's virtual insurance will just from 1 to 4 to 8 to 16 to 32 to it just grows. So to answer your question in short, absolutely.
So, ma'am, we got to know about virtual insurance, but will human agents become obsolete in the insurtech age?
Never. So going back to my virtual insurance slide that I shared with you, um, humans need to be used to do what humans do best, and that is service and empathy. We were not traditionally built to data capture. We were not traditionally built to move paper from one page to the other or the one desk to the other. When you hire somebody as customer service, by definition, that agent or that employee wants to do service. But we, because of the way our industry has grown, have made them into a transactional processor, and their ability to do customer service has become limited. I believe technology will allow humans to do what they do best, which is work with empathy and be able to do what we are really good at, which is innovation and thinking and going beyond what transactions are expected of us.
Thank you. Thank you. Like, you have like covered a lot of questions, and also you have covered a lot of things about InsurTech. It was a really great session. If anybody has questions about today's session, can like ask ma'am about it. And yeah, if anybody has.
I would also be available post the session, supporting GCPIT to build this research paper. We are trying to create this research paper where we can map out all the insurtechs individually or as a group that are working to create this vision of virtual insurer. And if you would like to be featured in that, please drop us a note and we'd be happy to evaluate you and feature you in that. So that's another thing. Vitsala, I hope that's something that we'll cover in a bit also.
Sure. Thank you.